All right, guys, in this video, I want to document the type of signatures I look for and structure to base off my low time frame support and the kind of areas I'd look for to create a reaction. Um, now, we got to go pretty far back to find price action in the context of an uptrend, but we'll go back to autumn on Bitcoin. And we see this area right here, right? October 1st. Uh, October was just pretty much straight up. And we see this, what I refer to as vertical accumulation. So you see price setting new highs, and then basing off those highs, pushing higher. Right? You can get down into the very, very low time frame with these things. And this is a good point, is that this is the type of environment where you do want to get on the low time frames. Um, previously we talked about when you want to stand back, right? Those areas where a low time frame level is colliding with a high time frame level. That's typically where you see volatility pick up, and it'll take both sides of the marketplace before ultimately going in the direction of the high time frame trend. Well, here we sort of see that playing out, and we see as volatility moves away from the market, then that's kind of when you can, get a little bit closer to the market and play a little bit tighter. And you see that example playing out here, right? You got these very, very nice movements as price comes up above these highs, bases down above those levels, right? Once it starts closing above there here, you get this vertical accumulation here. So price runs out, price goes up, comes back, hits these wick levels here, very, very tight, pushes up, comes back, you can see, runs back to this level right here. This is just beautiful right here. Comes back, pushes up again, um, then starts basing out at this level, pausing at this level. You can see it's still running for the highs, right? You set in this low right here, runs for the highs, comes down, defends those lows. Um, so while we may see a gap right here, we may be looking, at that area. Maybe we're looking for a deeper retracement, but it's not until these lows are violated right here. Until that happens, right? As long as the low time frames are taking the highs, defending the lows, like uh, this level is just not in play at that moment. But anyway, we see this vertical accumulation. It's a very, very key point. And the one of the other key points about a vertical accumulation is, highs are taken out and you get higher lows, and then ultimately you get this impulsive release, or what people might call a point of release, that occurs pretty close to the highs of the range. So that's how you get your vertical accumulation signature. And you get push up. Now this one, comes down pretty deep, but it's Bitcoin, so it's going to have a few wicks on it. But ultimately, it comes down back into this consolidation, bases off it, comes down, and so it's not really this low you want to be looking at, right? Like if this came down, if you're looking, somebody may be looking at this and saying, well, market structure broke here. Well, it's, at the end of the day, it's really the right side of the chart that matters. So if you come down here and have this reaction, right, you could use this low as an invalidation point. And you can see here that price comes down, retraces a little bit. Maybe you draw a 618 retracement here. You get the idea, but essentially, or some other low time frame trade framed off this idea, but essentially you get the low time frame run at that level, comes up, use this as invalidation, maintains this vertical accumulation, run up above these highs, then you get not a break of structure, but a break of liquidity run above these, and then a pause up there, another push higher. Then now you can see up here, price is starting to get pretty extreme up here, because it's not even, ties into one of the earlier videos we posted about heavy order flow. Although that previous video was heavy order flow on the sell side, this is a great example of heavy order flow on the buy side. And by that I mean you can see how price doesn't even reach the price distinctions like these highs, right? Because the bids are just coming in too fast. It ultimately hits it here, but you can see prices whipping around up here. You still get your vertical accumulation here. Price up, higher lows, reaching for the highs. This is perfect volume signature right here. Not necessarily volume signature because we don't have volume on the chart, but just a price structure. Let me mark off that vertical accumulation here. Let's see. Run up. You can see how it's getting inefficient here because it really doesn't come down to these highs up here. Ultimately makes one less push higher. You have your price pause here. You get a reaction. Then ultimately comes back down to these vertical accumulation base. Get a reaction. But really, this is the part of the market where things start to turn around, right? It's the macro stop run. But you can see that signature playing out all the time, right? You see this. You got it right here as well. You got your this vertical accumulation, right? Now you can probably see this better on the low time frames. Pull this up real quick. There we go. But the idea is that price is essentially just grinding up against resistance, and the bids are just coming in too fast, and then maybe big short positions are closing here or whatever, but the door is basically kicked down and price just runs right through. The bulls were let loose, but we can say that this area, this vertical accumulation, will offer a reaction when price returns. We can see that it does with very little drawdown on that trade. And this is even more confluent because it's confluent with this violation of these lows right here as you test this vertical accumulation base. And another thing worth mentioning is that these distinctions are still valid, even if ultimately, if you were to hold on that trade forever, it would have been a good trade, right? We had a more bearish scenario playing out here. And even though we had a bearish scenario playing out, this distinction, this vertical volume-based accumulation here, still offered a tradable reaction, a significant tradable reaction from 62,400 essentially all the way up to essentially this low here at 66,000.